Gurmeet, give us a sense of what you felt was the standout part of quarter two. One, the headline numbers, and two, sectorally or bottom up, what stood out for you?
Hi, Neeraj. I think what if you see the broader universe, and I'm talking about like almost what 2,500 odd companies which have reported numbers, the earning was double digit, almost 14-15%. But you can take that because the base was low last year, YOY. I think the revenue growth stood out to me in a lot of pockets. I think the broader revenue growth was about 8.2, 8.3%. I think, and there were a lot of disruptions needed last quarter. One because of GST. Second, on execution side, if you see the commentary of L&T, Coal India, a lot of the infra players, EPC players, because of monsoon flooding, the execution was that. Had that not been it, probably the revenue growth would have been even better. I think auto stood out. I think probably we'll have another strong season ahead with again a wedding season coming up. Capital goods in pockets stood out. Metals did well, and I think a lot of us have been talking of metals now being in a longer cycle. I think banks, some of the banks actually reported flat NIMs despite all the pressure. And I think that to me is very, very, heartening. I love the commentary SBI gave that they are sitting on a 7 lakh crore corporate loan book, opportunity of which 3.5 lakh crore is already sanctioned. I think with RBI making changes on corporate loan, removing caps, allowing M&A financing, I think corporate loan one should watch out for because last 5-6 years we are used to retail doing the heavy lifting. So I think that stood out to me. And little bit of commentary on capex, Neeraj. Like for example, a lot of auto companies did capex. Force Motors talked about capex, 2,000 crore. That's largely a travel tourism play more. You talked about some of the CDMO names doing very focused capex, whether it is Laurus, DVs, etc. So I think look augurs well. Hopefully we'll have a full quarter this time with festive season, full GST impact, no monsoon. I think we'll have a much better quarter ahead.
Gurmeet, hi, morning. Tamanna here. This sounds like Q2 was better than expectations, and you're expecting Q3 to even top that. So every second quarter, companies come and say my second half will be better. This time, it sounds like you're believing them.
Looks like in a lot of pockets, and I think also what was good, Tamanna, was that IT companies had no shocks, right? They actually either in line or actually delivered a little better. So I think HCL did much better. Midcap IT, Persistent, Coforge, even KPIT, despite all the issues with auto, especially in Europe and some of the key accounts they manage, actually delivered a very steady set. So my sense is even IT could be a bit of a dark horse selectively as it's completely under-owned. And I think banks can come back. I think with inflation being what it is, you will possibly see a rate cut. I think we missed out in October, in my view, personal view, humble view. I think December you'll see another rate cut. And I think even banks, which are a large part of the Nifty, should start pitching in. HDFC is already now spoken of growing faster than industry. SBI has spoken about 12-13% credit growth. Now that's auguring well for me with whatever little I'm seeing.
Meet, hi, morning, Alex here. And so therefore, I want to ask you about those financials, right? You've spoken about the banks, but would you extend that positive view to the NBFCs as well? How would you personally be playing that?
So, Alex, we like HFCs, gold-based NBFCs. I've already discussed with you a few quarters back. It's I think continues to do well. I think we saw a good move in some of the consumer-focused NBFCs. I think Bajaj Finance was a bit of a disappointment because they really reduced the guidance. Numbers weren't that bad, but the band was more 21, 22 from 22, 23, and the market reacted. But I think it's at a 3 lakh, 4 lakh crore balance sheet, you cannot grow 30%. I think it's prudent that they grow more at 20%, and that is how I think there is a bit of a re-rating, de-rating which happened in Bajaj. So we like HFCs. It's a very difficult business. It's very difficult to get it right, but once you do get it right, I think the people tend to stand out. So we like Home First, decent correction there. We like PNB Housing in that space. I also think some of the capital market plays will come back as market starts becoming better. Breadth of the market improves, the overall activity picks up. There's been a bit of a lackluster performance from depositories, from AMCs because of the SEBI proposed reduction in TR. So I think some of the capital market plays will also make a comeback. And I think large banks, in my view, will get re-rated more. I think there's been a very long consolidation in likes of HDFC, ICICI. SBI has picked up a little bit. I think larger banks will see a clear edge with virtual, because of better liability mix and CASA.
Okay, thank you so much for that, Gurmeet. I wanted to quickly ask you your tops, hits and misses, but I don't know if we have time. Very quickly, do you have a top hit and top miss from this quarter?
I think the top hit was M&M and Bharti. I think looking very very strong. I think miss was chemicals. I was expecting some of the chemical stocks now to bottom out, but I think that's another one pocket. As I said, is completely underwhelmed. Very good valuations. So we like selected plays, like we like JG Chemical, which is a zinc dioxide play. So I think that's another pocket we are extremely positive on.
Okay, okay. Thank you so much, Gurmeet. Always a pleasure having you on. Thank you for the time this morning.